Ben ritrovati martedì mattina sul floor del New York Stock Exchange, manca in realtà una direzione ben precisa quest'oggi, con gli indici che tentano un recupero dopo le flessioni delle ultime sedute che avevano portato lo Sterling Poor's 500 sui livelli minimi degli ultimi 3 mesi. Parliamo dei temi di oggi con il mio ospite, come vedete qui sul floor del New York Stock Exchange, che è Mark Otto, Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So Mark, today I was saying there is a little bit of lack of direction. We had a lot of bad days. We saw yesterday the S&P 500 touching the 3-month low. What is affecting the market today? A lot of economic data.
Yeah, it seems like there's a lot of mixed data. We started out the day with Chinese data came out with foreign direct investment in China was lower than anticipated. With China, there are basically three things that are barometers that I watch: electricity consumption, rail car volumes, and bank lending. And all three of those have had a severe decline recently. Moving on to Europe, obviously, it looks like as though the German macro data is showing growth, which is basically the counterweight for Southern Europe, which is in contraction.
Italy.
Absolutely. So it definitely seems as though Germany is saving in the Eurozone as it stands right now. Here in the U.S., CPI data came out. It was basically in line, and Empire State manufacturing data actually beat the forecast. However, Dow laggard has been Home Depot missed, and the financials are doing a bit better. So we're seeing this little struggle here, and we've been dancing around flat, plus or minus 30 points.
And staying on the economic figures, this morning Tim Geithner said that the economy is getting better and is showing a little bit of resilience. I mean, this is so true if we see the latest data. I mean, today the manufacturing, it was a very good news because we saw manufacturing really disappointing, and it was a worrisome factor because manufacturing is supposed to track, really carry on the economy. So what do you think about today's numbers about manufacturing? And could it be a real signal that we are showing resilience?
Certainly, it seems as though two things that people have been watching for an indicator has been manufacturing and jobless claims. It seems as though the unemployment data has been watched with a lot of speculation. So I think that manufacturing has been more to the forefront as far as what people are looking at. Tomorrow we have a lot of housing data is coming out, new housing starts, building permits. Tomorrow is also crude inventories, and the FOMC minutes are at 2 o'clock tomorrow. So there's more indicators there. However, the housing data seems to be a lagging indicator. So we can be hopeful off this Empire State manufacturing data. However, we have to look at what the other districts are actually going to be reporting.
And of course the ISM at the end of the month.
Yes.
Now, staying on the financial, you were saying that financial today, they are going back up. I mean, we had really bad days, and JP Morgan is going back up too. We haven't, talked about this since the news came out, but of course there is a lot of chatter now at Wall Street that what happened to JP Morgan, the $2 billion lost. Again, we're talking about derivatives could really ignite again the debate. I mean, it's doing it on the Volcker rule. Do you think that the Volcker rule now has a real chance?
Well, certainly now there's a lot of things heading that way and lobbying for it. You would think that after what occurred with AIG, that derivatives would be more scrutinized. So I think that what occurred with JPM was perhaps a surprise to many people. So I think that going forward, that's a developing situation that is going to be really closely scrutinized because of you don't want anything that's going to actually draw away liquidity from the market. And that's just another step that's going to actually, I believe, it's going to make investors a little bit wary.
Now, lastly, of course, we have Facebook at the end of the week. We cannot avoid it. We've been talking about this all the time. And, considering what happened to the market, we were saying we had a lot of, sessions down. Do you think that Facebook could carry at least some, good vibe and good volumes at the end of this week?
I can't see. I could definitely see it both ways. However, of course, I think reaction in that stock in particular coming out of the gate is going to be, it's going to be on fire when it comes out of the gate more than likely. Whether or not that entire sector is going to follow suit, has yet to be determined because of how much is actually priced in already. We don't really know. So.
Especially considering, how now the internet sector is performing. I mean, we had a good momentum, but now maybe like all the eyes are on Facebook, and a lot of people are exiting from all the other big tech stock. And maybe if Facebook does like LinkedIn or Pandora, it's going to be a little bit complicated.
Yeah, for the S&P 500 earnings, we're getting towards the tail end, and the two leading sectors have been financials by surprise. They surprised, and they are also the first. Behind them has been telecommunications. So as far as the S&P 500 earnings, the laggard has actually been energy. So the telecommunications, technology, it definitely had its run. So we'll have to see if this IPO is going to do anything as far as that sector is concerned going forward.
Now, give me some technical numbers for the S&P 500.
Well, it's interesting. Right now we're at we're practically sitting on one. So 1342 is a level in itself. 1336 and then 1329. So 1330 level, it gets us down around the March lows. We've seen a lot of rebounding off of that level. So that's definitely going to be something that's going to be closely watched as we get down in those levels. On the upside, 1347 and 1357. So
We'll see. Thank you very much, Mark Otto, for being with us.
thanks for having me back.
E grazie a voi per l'attenzione.